So the broad message coming out from the economic survey is that if we don't have another wave of COVID-19 and if crude prices cool off a bit, about $70 to $75 per barrel, then we could have a much better year for the next financial year. Now, is this a very optimistic outlook or is it likely? To speak on this, I'm joined now by Aditi Nayar, Chief Economist at ICRA. Siddhartha Sanyal, Chief Economist at Bandhan Bank, is joining us on the show, and I'm also speaking with our consulting editor, Mythili Bhusnurmath. Welcome to all of you, and thank you so much for speaking with us. Aditi, let me begin by getting your overview of what is the key messaging that you saw from the economic survey.
Thanks, Amanda. Overall, I would say that the economic survey was a very pragmatic document, considering that we've already had 2 years and 3 waves of COVID-19, and we don't quite know what lies ahead. So it's very fair to lay out all the assumptions in detail in terms of what is the building block of the macro forecast going forward. And I think, in terms of inflation, they've clearly highlighted the divergence between the CPI and WPI, the reasons for that, and forewarned on the fact that imported inflation is indeed going to be a concern going ahead. On the growth side, our own forecasts are a little bit different. We're less sanguine on FY22. We believe that GDP growth for FY22 is likely to be closer to 8.9%, having taken into impact the limited disruption caused by the third wave or Omicron on Q4. But for FY23, we're actually a little more optimistic, given the sharp base for the first quarter and looking at a full year assumption of 8.9% for FY22. We actually think that in the baseline, GDP growth could go up to as much as 9% in FY23. So that's where we're a little bit optimistic as compared to the survey. But overall, I would say that it's a very pragmatic document.
I think the comment on inflation was quite a telling one and really reflective of the kind of challenges that nations all over the world, not just India, is facing. Mr. Sanyal, your take on how inflation might be a bugbear in the time to come and how the economic survey has highlighted this.
Well, as Aditi also mentioned, that this particular document comes out as a very, very detailed, very analytically rich and pragmatic document. Also, it lists out all the assumptions and baseline expectations on most of the parameters. On the inflation side, I think the worries remain quite significant, both from this particular document as well as from various other communication time to time from the Reserve Bank, MPC members, etc. What is actually a bit of a concern at this moment is the so-called known unknowns in this overall scheme of things on the inflation front. We have seen the time and again in the last about 18-20 months that many a times it so happened that some kind of a supply bottleneck has actually had a bit of a disproportionate reaction on commodity prices, on some of the other inflation determining factors globally, as well as in various other countries and various other economic zones many a times without, and we couldn't really factor in and we couldn't really model all of them. And many a times they got impacted. The impacts were felt even in our country also. Also at home, what has been a worrisome factor, and I have highlighted that in your show a number of times, that some of the seemingly smaller factors had actually played a significant role in terms of, for example, frequent weather disruptions, etc. So many small things have actually contributed to an overall bigger set of uncertainties on the inflation front. My sense is that we have to live with that particular thing, and to some extent we are learning to live with that going ahead in the near future. And FY20 to 23 will not be any different.
Mythili, I'd like you to come in with a question on what you would think the top headline is out of the economic survey. Do you think it is representing clearly enough and honestly enough the challenges that we're going through right now?
Well, it is a rather optimistic and rose-tinted view of the economy because it doesn't seem too many dangers. Things like, as I said about earlier also, we talked about the oil prices. I think you mentioned it, that the survey estimates it to be in the range of $70 to $75 a barrel. And we've already seen it as over $90 a barrel. And though in the subsequent press conference, Sanjeev Sanyal did say that, look, not so long ago, oil prices were very low also. So they've taken 70 to 75 as a reasonable estimate. But the fact is that today, situation is very, very different. We're seeing strong revival in demand. We're seeing the US dollar strengthen. We're seeing liquidity tightening. A combination of factors means that we will not see oil prices really fall so dramatically. So I think the survey is a slightly rose-tinted view, which is understandable because it is the government's view after all. But what is different about this survey as compared to the earlier surveys is that it's a very, as Aditi said, pragmatic. It's a nuts and bolts, frankly, boring, dull survey, I would call it, because it doesn't have any of the vision or those grandiose plans that earlier surveys used to have. Because remember, this economic survey was typically the chief economic advisor's wish list, quite divorced from the political economy, which was typically used to float new ideas. So whether it was privatization, universal basic income, farm reforms, these all first made their appearance in the economic survey. This time, perhaps because we don't have a chief economic advisor, and also because Sanjeev Sanyal's own term is coming to an end shortly, for a combination of reasons, all we have is a very dry restatement of whatever happened in the past. The only new thing that I could see was the estimate for the next fiscal of 8 to 8.5%.
Yeah. In fact, Mr. Sanyal talked about this, I think, in the press conference as well, where he said that we had just about 900 pages on the survey and there was no space really for new stuff or new vision, new ideas. So that was definitely missing. It is pragmatic though. Is it realistic is the question. Aditi, if I were just to go a little beyond the economic survey, and the next really huge, in a sense, policy event is tomorrow. The economic survey usually sets the ground in a sense for it. Do you expect that pragmatism to spill into the announcements that we will see tomorrow? A lot of nuts and bolts and a plan, a contingency plan, because we don't really know what's coming next. We don't know if Omicron was the last wave.
Absolutely. And I think that's an uncertainty that all of us have to learn to live with. We don't know whether there are going to be future waves, future variants, whether the vaccines that we have are going to be potent enough against those or not. And all planning is being done now based on uncertainty, being a central theme. What do I glean from the survey for tomorrow? I do think that there is a very strong indication that we're going to get a big capex push tomorrow. We got some early data for December earlier today, and what we can see is a big jump in capital spending in the month of December. Although I suspect a large part of that is coming in from the equity infusion that had to happen into Air India before the divestment was completed. Having said that, we don't think that there is going to be an undershooting of the capex budgeted target for FY22. And I'm hopeful that we're going to see a big, as much of a step up as fiscally is feasible in the budget estimates for FY23 tomorrow. So that's, what I have drawn out of the survey. I differ a little bit in that, yes, the fiscal deficit in the first 9 months is just about 50% of the full year budget estimate, but spending is going to be very back-ended. So I think there is still a likelihood of a modest overshoot of the fiscal deficit as compared to the budgeted target.
So that is something that everyone is assuming, that the fiscal deficit will be in space because of fantastic tax revenues that we've seen. Mr. Sanyal, does that give you some comfort, the fact that tax receipts have been, above estimates? GST has been steady at about 1 lakh crore a month now since July.
Yes, that's clearly a positive factor. Basically, the government has communicated about this particular factor earlier, and also what we got to see from today's survey is that the government emphasizing on one particular point, that India's relief towards the COVID-related shock had been more supply side oriented rather than just trying to give some kind of fillip to near-term demand, which is a great approach in a way, that if you actually cater to that. India is typically a supply side bottleneck country. So there, if you actually cater to that particular or adhere to that particular approach, that over a period of time, you actually provide boost to the near-term demand as well as create some long-term growth potential. So that has been some kind of a significant message from today's communication as well as from the survey. We need to figure out that whether the reflection of that we get to see in tomorrow's budget also. If that is the case, I think that will be something to cheer for.
Yeah. Another comment that I really wanted from you, Mythili, is what Sanjeev Sanyal said on consumption. And the view is that our consumption is robust. He was, of course, also referring to government consumption. But private consumption and how tepid it has become, especially after the third wave, has been a continuous cause of worry. Do you think that this is something policymakers will have to address, perhaps not in the budget, but over the next few months?
Well, the best way to address the problem on the consumption front is really through the investment lens. If the government were to spend on infrastructure particularly, you would have creation of vitally needed physical assets as well as creation of incomes in the hands of those at the bottom of the pyramid for whom the propensity to consume is much higher than those at the top end of the pyramid. So you could have a win-win situation. So we should not really bother so much about consumption, looking at it purely from the consumption lens, but look at it through the investment lens. And that is what the government needs to do, spend on capex. And that is the point that the survey also makes, that the government has a fiscal space. In fact, it has had it for a very long time. It is very difficult to understand why the government is only at about 46% of the fiscal deficit for the year as a whole, in a year where there was a crying need for the government to spend. So the government's reluctance to spend has been a big, big puzzle. Maybe when history books are written, economic history books are written maybe 20 years or 30 years hence, we will have some idea what was holding the government back. Remember, last year's economic survey also made the same point, that do not worry about fiscal deficit. Rating agencies, don't bother about them, ignore them. That was the message that Subramaniam really gave, Krishnamurthy Subramaniam, but the government, for whatever reasons known to it, decided to ignore that. So the government has not been spending at a time when there is a need for it to spend. So hopefully it will now wake up and take the lesson from the survey. Governments usually ignore surveys. Their wish list of economists completely divorced from political economy, and they usually discarded in the dustbin as far as most governments are concerned. But I hope they do take this suggestion from the survey very seriously, because there is a crying need to pay heed to it.
Aditi, I was asking you to comment on what Mythili just said, that there seems to be a hesitation on the part of the government to spend. Why do you think that is? And do you think, are you as optimistic that it will change?
Look, the way I see it, there have been certain specific factors which have particularly impacted the momentum of capital spending. So normally we see every year when the monsoon comes around, there's a hit. During the second wave, again, there was some impact on capital spending. Similarly, I'm hopeful that that won't be the case in the third wave at least. But what we've seen in the December numbers is this big step up in the capital spending. Part of it is real and part of it is the equity infusion into Air India, based on my early analysis. But I do think we're going to get very back-ended overall spending in Q4. This happened last year as well, because there are, just from a budgeting point of view, there are a lot of subsidies that are yet to be released, which were included in the second supplementary. And therefore, we are confident that that spending has to happen, and it will get accounted for in Q4. Now, the issue is of fiscal impasse is different. I believe spending will be back-ended in Q4. Spending will be higher than the budget estimate. But is there a very sharp fiscal impasse coming out of the spending? Possibly not, because some of the areas on which additional spending was necessitated during the year was partly because of higher commodity prices, which is the case for fertilizer. Part of it were the fertilizer subsidies. Part of the higher spending is toward the free food program, which is more of a confidence building measure and a measure to prevent another migrant exodus. There are things like the Air India equity infusion, which I already talked about, which is more of a legacy issue. There's a cash flow support measure, which is clearing up the export subsidy dues to the exporters. So there's a whole host of spending measures, but all of them don't have an equally sharp fiscal and growth impulse. And I think that's where Mythili and I differ a little bit. I do believe spending will be there, it will be back-ended, but it may not really have that growth impulse that Mythili is looking for.
All right, we'll have to wait and see. We'll end this here, but all eyes now on the big day tomorrow. Just a couple of interesting nuggets that came out of the survey. Between April to November 2021, over 2 crore individual demat accounts were added. The survey also talks about the number of startups that have increased and how India is now only third to the United States and China in terms of the number of startups. So some bright sparks there that have been highlighted in the survey. Was it too rose-tinted, and was it truly reflective of what our economy is going through? Perhaps not, but we hope to get a clearer picture tomorrow. Thank you so much to all of you for joining us today.